Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you. Today is, what is today? Wednesday, March 9th, 2016. Permendra says, good morning, Mike. Hope you had a nice time in Colorado. Thanks for that. Eileen says, good morning. Happy to see you home, or happy to see you. Hope you had a great fun and made it back all in one piece. I sure did. So Colorado, like you said, food for the spirit and soul, my friends. Good to step away from the charts to get a really nice perspective. But we're back, pumping on all cylinders and ready to go. So we're about to get the release of the Bank of Canada interest rate decision. Most of the polls that I've been reading have shown no expectation for any change. Okay, they're seen or expected to be on hold, and the focus will be on the guidance moving forward. So I'm monitoring the headlines, and I'll give you those as they come through. As always, any questions, trade setups you guys want to jump into, feel free to throw them out on the message board. We had a nice rally in overnight for the Aussie. As we see a nice little rebound here in risk. Most European equity markets in the black here today. You got the CAC 40 up 1.22%. DAX is up 1.33 on the session. U.S. equity futures also look poised to open higher here in New York. Look at a quick relative performance for the dollar so far heading to the U.S. Open. You see a nice split to performance. So the Aussie, Kiwi up 0.5, 0.31% respectively. Not much there on the CAD ahead of today's release. Again, the Japanese yen, sterling, really lackluster performance. Euro and Swiss coming off abruptly in overnight trade. Euro is testing that major support still, reinforcing the weekly opening range. So we'll talk about that. Dollar Swiss made a break of the opening range high, but we'll continue to monitor that one as well. Okay. And again, beware the Bank of Canada rate decision at 10 o'clock today. So we'll give you a quick prep on what we're looking for there. Expectations are for a hold of 0.5%. Okay, let's jump right into yesterday's charts. We'll go over the update first, and then we'll jump into some of the radar charts on some of the Aussie crosses that we're looking at. First up is euro dollar. And again, with the ECB on tap, not something I'm necessarily getting involved in right now, but certainly we'll be looking for this key play. Before we do, dollar index. Here's what the Dow Jones FXCM dollar index looks like. So the base that we rebounded off of this week is the exact 618 extension right off the high, literally 12,026. The low that we made was 12,025. Today's low was exactly 12,024. So right there at that 618 extension, you have the 200-day moving average currently offering some resistance, and this is going to be the range break that we're going to focus on heading into the latter part of the week, ECB, and so forth. A downside break beyond this, there's really nothing to look at until 11,970. And that's going to be a 50% retracement of the entire rally off of the May lows from last year. So you got clear-cut levels as far as where we're looking for on a downside break. Resistance, I'd be looking right here. Okay, the median line that we're working off, that December high, former trend line support, that dates back to the lows we made in May. And both of those converge right around 12,096, 12,095. So there is some room here if we do see a topside break above this 200-day moving average before all is said and done and move off. Here's what the dollar index looks like on the 30-minute. Okay, here's the start of the week. One interesting thing I've just been looking at, basic trendline support, okay, has been a really nice pivot in price. Okay, and that comes up just higher from where we are right now. Remember that the weekly open comes in at 12,070. So let's mark that down. Okay. And that's what I'd like to use as a designation break for the upside on the dollar index if we get it. Below this, you have to be wary of any long dollar exposure, specifically with what we're trading at now heading into the ECB and the event risk later this week. All right, so clear-cut levels as far as the dollar index is concerned. Again, the 200-day moving average coming in just right about where we are right, a little bit higher rather from where that trend line is that we're working with that pivot. So look for that 12,049, 12,050 levels resistance on a topside break. The weekly open at 12,070 would be sort of the breakout type of play. Even in such a scenario, you'd only be looking for a rally into the median line, which is right here. So the levels are pretty clear here for the index. Obviously, heading into the end of the week, you do have some U.S. event risk. Or actually, I'm sorry, there's no U.S. event risk of note for the remainder of this week. Next week, you get retail sales and the like. Obviously, the FOMC will be the highest headline release that you'll get this week, but most of the event risk will be by way of the euro and the central bank decisions that we're expecting. You got RBNZ on tap tonight. Lots of stuff going on from the event risk side of things. Any questions on the dollar index before we move off? All right, so let's jump into yesterday's setups. First up on tap was Aussie Swiss. If you guys remember, we've been following this one quite closely over the last couple of days. We'll come back to the euro dollar. I just want to go over Aussie Swiss real quick. This was coming into a big resistance level yesterday, and basically it was 74.56. That's an 88.6 quick retracement of the December decline. You also had the the high day outside reversal close, which came in at 74.39. And then the median line off the lows was right in that region. So big resistance. If we pop through, and especially if we close up here above 74.56, you're basically looking for a stretch into the high that we made for December. Okay. On the intraday charts, here's what it looked like. Last night, you had set up a really clean weekly opening range between 73.40 and 74.56, again, that 88.6 retracement. So we were looking for a break of this range with the top side bias favored. You got that break in overnight. Looking for this trend line right here, which comes in about 75. Next subsequent region, like we said, are those highs that we set forth a couple of months ago up into 74.56, 74.50. Here's what it looks like on the daily first. Okay, you can see a clear break of this. We're going to want to see this close above this region. Also note that this is the first momentum drift above 60 since way back here. And last time we saw a 60 break, obviously in November, charged a really nice rally right into the November highs. So here we are again, above 60, price pushing through resistance. Watch that high for December at 75.47. Here's what the intraday chart looks like. Okay, so in comparison with what we were looking at yesterday, there's that opening range. You see a topside break. Could come back and test this as support, but as long as we hold above 74.40 right now, 74.39, we'll favor longs in Aussie Swiss. Now, I do just want to prompt this. There's not that much Aussie data on tap, and a lot of this is going to be really determined by the broader risk sentiment that we see on the back of these central bank rate decisions we're getting over the next couple of days. But that being said, I just want to be wary of this heading into the close today. We're really going to want to see a firm close above 74.40 to continue favoring the long scalp here in Aussie Swiss. Certainly from a momentum standpoint, the shift is there. Okay, the shift is there from sub 40 territory to overbought. This is obviously the highest overbought condition that we've seen in a couple of weeks. So expect some pullback from here, looking for long triggers on the way down. The bullish invalidation level is still going to be the weekly open 73.40. All right. I know it's an interesting pair, but it's given us a very healthy ATR, 30 pips per scalp on average, a quarter of the daily ATR, and certainly from a structural standpoint, if we take a quick zoom out, you can see that it's got some really nice structure here. That 75.46, by the way, is not only the high that you made for December, but if you take an exact 100% extension off the low, the 100% extension comes right in there as well. Okay, so you have clear-cut resistance is where we're looking for as far as the Aussie Swiss is concerned. As always, if there are any other new guys here in the room, feel free to always click the camera button in the top right-hand corner of your GoToWebinar screen if you want to take a quick snapshot of any of the charts that you see presented on our webinars. Any questions on Aussie Swiss? And again, this is going to be the bigger of the resistance levels. Remember, this line that you see here, this sliding parallel, is the same slope, but this is simply extended off the low that we made here on the 10th of January. Where this line that you see here in gray, this is actually the 50 line. So this actually bisects this top half, and that 50% comes right along in with that high heading into the close of today. Okay, so just something to take note of as you head into that 75.50 barrier on the upside. All right, and that is the Aussie Swiss trade. So if there are no other questions on that. What do I have here? Remember the high close at 75.10. Oh, I just wanted to note that as well. I have it in my notes. So the high close, guys, this is remember, 74.40, 74.39 is actually the high day close for December. the high close itself comes in at 75.10. Okay, so just beyond where we maxed out on that last rally here. So it's the close high for December trade. Let's put a soft target there. All right. Moving right along. Next up on tap is euro dollar, and certainly will be in major focus heading into the ECB interest rate decision. There's a lot of talk on what we may or may not get from the ECB tomorrow, guys. Just look, keep the powder dry, and at the end of the day, we're going to continue to be guided by the technicals. Okay, there's so much rumors and possibilities and what ifs and they could and they might and all this nonsense. So for us, we're going to continue to stay focused on price. At the end of the day, they're not really expected to do much by way of going into negative rates or anything just yet. Okay, there are expectations that they might come out with a little bit more forceful language. At the end of the day, it's going to be interesting to see how they pad this, because market expectations are, again, if we look at Prattle or some of the other statistical information that we look at on our side, as far as the bank research is concerned, there's still expectations actually that they're going to be a little bit more hawkish today, which is kind of counterintuitive to what we've been expecting. So same thing with the BOC today, guys. If we look at some specific research that me and Jamie check out on a daily basis for some proprietary research, they're suggesting that the BOC is most hawkish that they've been in quite some time, which is kind of not what we're expecting. So certainly, the expectation, or at least the deviation from the expectation on these interest rate decisions, is really what we're going to be trading. At the end of the day, looking at the euro dollar, let me just bring up the daily chart. It's stuck between the 100 and 200-day moving averages yet again. Okay, and we've had this play in the euro over the last couple of weeks. We had it once here earlier in February where we straddled that 100, 200-day moving average literally for a week before a clear outside day reversal broke the weekly opening range low, shifting the focus lower. Here we are yet again. Weekly open came into confluence resistance at 1045. You got the 200-day moving average in there. You got the 618 extension off the low in there, and that's now also the weekly opening range high. Okay, key support, well, it's not the opening range low per se, it's just below it, but we're going to continue to watch this December high day close, which was the reversal close that we made here on the 15th. Okay, that's at 109.24. Just beyond that, 100-day moving average at 109.17. So very, very clear-cut, well-defined range that we need to clear. A downside break, you're looking for key support and the final bullish invalidation level. We were dilly-dallying there last week. You're looking at the 2016 open, that's at 108.72, and a key 764 retracement of the 2016 range also comes in at 108.66. So you got a nice range of support. Don't forget that the median line off the highs is also right there in that region over the next few days. So you have clear-cut levels here for the euro. Okay, the focus range heading into the ECB is 109.24 into 110.45. Bullish invalidation, 108.72 into 108.66. And again, a breach of the highs, which is what we are going to favor, is going to target 111.20 and right up into key resistance into 112.50. Here's what euro dollar looks like on the 30-minute chart. Okay. So, again, just to give some reference, let me just zoom this out real quick, snap some of these lines. Okay, so you can see, excuse me, the weekly open right here. You open up the week, you test that major key resistance confluence. Again, that 618 extension, 200 overlap. You saw some really nice rejection there. Key support, again, you have a soft target here, 109.24, which is going to be, as we noted on the daily chart, that December high day close. And that comes right in line with 100-day moving average, excuse me, right down there at 109.18. So key support, key resistance, look for the break. We're favoring a topside break, but the bullish invalidation level is still 108.72. So even if we break to the downside here, guys, wouldn't necessarily be looking to scalp this, but if we don't get any long triggers and it moves surpassing 108.62, I'm going to abandon the long side here for the euro dollar. Swing trades are still on the long side here for the euro, looking for that pop higher. Still love the trade. Again, we're heading into major event risk, so expect some volatility. But heading into the ECB, the focus will be on that 108.72, 108.66 level. And if we hold above this, we're going to continue looking for long triggers in momentum on the euro dollar. Any questions on the euro before we move off? So just to give you guys a quick picture of the ECB and kind of what we're looking at. This is a piece I was reading earlier today, and again, I don't want to put too much stress on this bank research, guys, because they're typically really horrible. This is more for novelty reading. It's not real for real traders, in my humble opinion. But that being said, some analysis says this: our analysis of the situation is the governing council should deliver, quote unquote, at a minimum, a 10 basis point cut and an increase in the pace of the APP. Likely another 75 billion euros per month or so. The possibility for more are nearly endless. Possibilities for more are nearly endless. We discussed this earlier. So whether they come out with some new easing or not, the expectations are there that we're going to get some firm language, sort of a Mario Draghi, whatever it takes kind of thing again, which could give some lift for the euro. Remember, a lot of their counterparts have already moved deep into negative territory. Sweden, Japan, and certainly this would be a precedent here if we do, or if the ECB does make that decision. Okay. Any other questions on euro before we move off? Craig, I see your question on euro key. I'm going to jot that down. I don't have anything relevant, but I'll definitely take a look at it for you, man. It should be interesting to see how that's playing out today. Euro Kiwi. I know that give me a lot of interest on those euro crosses. Okay, so looking for long triggers here on the euro as we move off. We'll see how this pans out as we head into the U.S. Open. So that was last night's two featured setups. Again, I really like the Aussie Swiss more than anything. Euro dollar, I'm going to keep that one on tap. We're really going to be watching it closely as we get deeper and closer to the ECB interest rate decision. From the radar charts, I do want to go over some of these Aussie crosses, specifically with what we're seeing today with all this Aussie strength. Let's go over Aussie dollar first. Here's what Aussie dollar looks like on the daily. The major thing I just wanted to highlight here for Aussie dollar was this resistance that we were looking at into 74.90 essentially. Yeah, nice confluence resistance of the 50% retracement from the decline off the highs and the exact 2618 of the extension off the lows. It's that brings into 74.91, 74.89. That's exactly what we're testing here. Excuse me now. We highlighted that region last night. Also is basic channel resistance, which I'll show you in a moment on the daily chart. I guess we can do it here too. But the point being, you've got a very clear, definitive range here, also heading into event risk later this week. And that's defined, obviously, by that overlap we just talked about into 74.90, basically 75 handle or just ahead. Key support, 73.80 to 73.86. Okay, you're basically looking at some former highs. This is the 100% extension off the highs, and more importantly, comes in just below the weekly opening range low. So you have a really clean weekly opening range. You're at resistance. A downside break would look for a pullback. Inevitably, would still be looking to get long. Okay, here's what Aussie, or I guess let's see what Aussie Kiwi looks like. Excuse me, or Aussie dollar looks like on the intraday charts. Eileen, absolutely. Yeah, we'll definitely take a look at sterling. Interesting. I'm actually getting very interested in sterling very soon. Here's Eileen. I just want to see if it breaks this high, this swing that we're making, but certainly at a very interesting threshold. Let me jot that down. Definitely want to talk about sterling. Okay, euro got Aussie dollar. Okay. So not really much to say here on Aussie, to be honest with you. Really clean opening range. Feel free to scalp the range on the long side while above that 73.86 level. Again, a very clear cut readily, easily identifiable target that we need to clear to get the longs in play, and that's that 74.90 handle. If we breach, you're looking for that upper median line parallel. Again, here's that daily chart. And that comes in somewhere in the range of like 75.50. Excuse me, 75.50 or so. Depends on where we are in time. But if we do see the top side break, beyond that, you're looking for 75.90, and that's just a soft target in price. Oh, I stand corrected. 75.90 is that soft target price, but it's also the April low day close that we made right here. Really nice pivot in price last year. If we break through the upper median line, that's your next target. Trade remains constructive while above the opening range low for the week. All right, so what's the game plan heading into the U.S. session? See if we can get some downside play here with a short trigger, or a long trigger, excuse me, while against that low to play back into this region. Really wouldn't be looking to hold on to any longs, guys, as we come into here. I'd be looking to clean up that book. If you want to leave a little bit on the table, bring your stops to break even to see if we can get the breakout, that's fine. But long story short, you have really clear-cut parameters, and especially with the overlap that you're seeing, you really want to respect that key resistance. 50% retracement. This is off the high that you made from May of last year, by the way. So real clear-cut levels here on the Aussie. Momentum signature also looks pretty healthy. I wouldn't say it's the most constructive. You're seeing some really nice basing support at 40. Nice multiple breaks above 60. But broadly speaking, near-term momentum signature still looks pretty constructive. Sorry, excuse me. Any questions on the Aussie dollar before we move off? And again, limited event risk from Australia this week, so we'll be looking for broader market sentiment. Aussie Kiwi is a very interesting play. It's been a while since we highlighted this on the intraday charts, but I did want to just recognize the breakout that we're seeing. The major key resistance pivot that we were talking about for a few weeks has been 109.10 into 109.35. 109.35, again, is going to be that July low day close. 109.10 is a longer dated 236 retracement. This is from the decline off the highs that you made 2011. Has been a very nice pivot in price. And here we are yet again popping right through. So near-term resistance is the 618 retracement from the decline off the August high. That comes in at 110.67. You also have, if you're not bored of hearing this, guys, for those of you who've been here for a while, that same trend line from the 2014, January lows, which has been such a clear-cut pivot in price, that comes just above the 618, somewhere in the range of like 110.90, excuse me. So you're coming in some major resistance. Keep in mind, the shift that we're seeing in momentum is also something very significant. Okay, this is the first 60 breach that you've seen in momentum since way back here. And it's the first 60 breach from oversold conditions, or sub 40, since here. And you can see that was just the onset of the rally that took us into the 2015 highs. So even looking at this objectively from the momentum signature, there's a change in behavior. And we always want to be mindful of these things because they can be a very strong tell in what we're seeing in broader price. So again, from oversold into the overbought condition or above 60, it's the first time that we've seen it since early last year, and suggests that the momentum signature is certainly shifting to the upside here. Near-term resistance, look for 110.67. Again, that median line that we've been following for the last couple of years comes just higher. Here's what Aussie Kiwi looks like on the intraday charts. And here's what we looked like last night. Okay. Oh. There we go. Okay. So the level that we were highlighting here yesterday, and it's been a messy break, I completely understand that, but I just want to highlight it nonetheless. It's this region right here, okay? You're looking at 110.16 into the 110 handle. You have 100% extension off the low that came into this region. More importantly, this level also denotes the November high day close, and you also had that median line. If you look at the daily chart, I don't actually have it on there. We can certainly add it. There you go. You can see that that median line was right there as we opened yesterday too. So we're pushing through. You're going to like to stay a constructive approach on this while above that swing high we made last week, basically 109.66. A topside breach from here 110.66, excuse me, is a 618. A topside breach from here, there's really not much scalp targets, guys, until you go all the way up into that 112.13 level or so. So big resistance region. I also just want to point out that longer dated trendline resistance that we were looking at from 2011. You can see that right here. That comes in just higher as well. Somewhere in the range of 111.50 on a breach. So the basic premise of the play here, guys, and I haven't traded this yet, that's why it's on the radar charts, is that you are coming into a big area of resistance, of structural resistance and Fibonacci resistance. And certainly heading into the event risk ahead, we're going to be looking for a reaction off of this level. Haven't really been interested, like I said, in scalping this per se. More so, I want to see if we're going to clear that 110.67 level or if there's going to be more of a mean reversion trade to the downside. Base case scenario, this is just my personal humble opinion. I'd love to see a pullback. You stay constructive above 109.65. Keep in mind, like I noted yesterday, you're still getting that ongoing divergence in momentum. So price action, higher high, higher high, higher high, a series of lower highs suggests still that we could be seeing waning momentum. On a pullback, that's where we'd like to start to look for some more long triggers. All right. And with what the Kiwi's doing, wouldn't be surprised, okay, to get some more back and forth on the pair here. But we'll keep Aussie Kiwi on the radar for now. Any questions on Aussie Kiwi before we move off? Honestly, it looks like a break of the weekly opening range high. I would have liked to see a little bit more of a run on that. Objectively speaking, near-term support is the former opening range high. You're looking at like 110.30. Okay, so we went over Aussie dollar, we went over Aussie Kiwi, Euro Aussie, another beautiful play, I think. We'll get some really nice moves on this week. Here's what Euro Aussie looks like on the daily, and the only thing I wanted to highlight here is the major support that you were coming into again last night. The risk is for a rebound right off of the low that we made. If you look, this is the exact lower median line parallel for the formation we've been following just off of the 2016 highs. Here's a January and February high. And there's the ML formation with the lower median line parallel, literally catching that here today, almost to the pip. This is a longer dated 38.2 that you're looking at in purple off of the lows that we made in 2012. I don't want to stress this, but certainly, you're seeing that come into play here right now as well. So for a Euro Aus, here's what the intraday chart looks like. Let me just snap this real quick too. So for Euro Aus, a couple things to take note of. A, the opening range for the week set up just above that support at that longer dated 786 retracement. Here's the break. So objectively speaking, sub 147.50, you want to be mindful and continue to wane or continue favoring the downside. Where I would look for a possible entry or a rebound would be a move into this region. If we come into the 88.6, if we come to this soft target here at 45.91, lower median line parallel might be a nice opportunity to try to play a long scalp. At the end of the day, if we do get a sizable rally, like I was saying in the report, I'm actually looking for a sell position. So, that's sort of the game plan that we're moving here with the Euro Aus as we move into the week. Again, be mindful of the 50 line for the current operative formation that we're trading in. On a topside bounce right now, that's exactly where the weekly opening range high comes in. So another possibility for an area of which, if we get some short triggers, might be an area of interest into 48.90, basically the weekly opening range high. Okay, and this is going to be the immediate bearish invalidation level. So if we do get a pop there, you'd expect to see a run on the median line that could take you as high as 51.65. Remember, this is a much wider range scalp. Okay, we're not looking for 20, 30 pips. A quarter of the daily ATR is still giving you 54 pips per scalp. So there's a lot of room here, and again, would be a nice play either on a rebound off this region to play the rebound or on a rally back into 48.90 with some short triggers. I think would be a nice play back to the downside. But we'll have to see how this pans out as we get deeper to the ECB tomorrow. Any questions on Euro Aus? The break of the opening range low here is testing the median line parallel. We'll see if we can hold above that or not into the close. Okay, so those are the setups I'm focused on here. Just to start off the week, again, we have a lot of stuff going on this week, so we'll want to see how this pans out. I'm very interested to see the Bank of Canada at 10 o'clock today and obviously the ECB, whatever they do, whether it's going to charge that hold of euro dollar or whether we're going to finally clear that 200-day moving average to the upside. So with that in mind, let's jump into some of your questions. Craig wanted to take a look at euro key. Let's take a quick look at what that thing's doing. Okay, so I'm still going to be mindful of that confluence support now with the median line down at 161.13. Is it 161.32? Excuse me. Basically, look at the confluence of the median line, which we've been straddling off the high, but it's a basic 764 retracement of the December rally. Momentum holding above 40, something you want to be mindful of after breaking above 60. And key resistance right into the 63.50 level. 64 is that 618. Let's see what the 30-minute looks like. Okay. So, Craig, let me know if you have any specific questions on this or what you're looking to do. For me, in my mind, this thing has just set up an absolutely beautiful, magnificent weekly opening range. Here's your weekly open. The weekly opening range high comes into resistance. You pull back. It looks like you're finding some support here right ahead of the weekly opening range low. So I think on this one, you treat it, as a range until such time where it breaks. As far as the euro key is concerned, broadly speaking, I actually would like a more concerted rebound. Remember the yearly open. Let me add that for you. The open comes in at 59.16.7. Okay. Okay, so this was actually, I was looking at this last night. So this is actually just a sliding parallel, guys, of the same slope that we've been working off that high from earlier in the year. Gives us resistance right along the opening range high. So actually, I do like playing this range. Craig's saying I'm looking for a long trigger with a stop against the weekly OR low to play the range. Yeah, I think that's the way you want to do this one. I think that's the way they want to do this one. The only caveat here that I want to point out, Craig, and why I'm a little bit more cautious early in the week here is because if we look at the momentum signature, let me just clean this up for you real quick. It's not all that constructive here. Okay. In fact, since the open of the week, yeah, you came into key resistance and it was a really nice hold. But look at this intraday momentum failing miserably to hold above that 60 level. And then this is your deepest cut into oversold in over 2 weeks. Okay. So I wouldn't be surprised if this runs to make another low here into the US trade session. I'd be looking for a trigger a little bit lower down. On that scenario, I just want to say this, be nimble. Okay. Even if we take a long scalp on this, remember a long scalp in this type of trade environment is counter trend. So even within the confines of that, I'd be using a little bit less leverage if you do get a decent trigger. I do like playing the range. I just want to be mindful of the fact that near-term momentum really is not all that constructive, Craig. So like I said, we can make money on long scalps in a downtrend any day of the week, guys. We just need to be much more nimble, and we want to reduce that leverage size because we are trading against the broader trend. I do like a turn here for the record, Craig. I do like a more of a basing here and then a turn higher. But from a scalping standpoint, we still need to keep that powder a little bit dry until we get a validation of the broader reversal. Craig, does that make sense? I like where your head's at. I'm on the same page, at least at near-term key support here. But before we start pressing the longs, we're going to want to see that price action on the intraday momentum shift. The one thing you do have good going for you is that momentum's holding 40 on support on the daily. So this is the first break into overbought that you saw since, September of last year. And on the pullback from overbought or from above 60, hold at 40 is exactly what you want to see. Okay? And the reversal trade, as it were, would be a break back above 50 in momentum. So I think you have a clear-cut levels that you want to be looking at, and specifically from the momentum profile, as far as the scalp is concerned, that's sort of where my mindset would be. Craig says, yes, makes sense. Took a snapshot. Thanks. And more than welcome, Craig. Great to see you in the room as always, man. And again, I like it. I like it. Let's just see if the Kiwi. Let me take a quick segue here. Eileen, I'll jump into the sterling in just a moment. Here's what Kiwi dollar looks like, Craig, so we can just put the picture together. We kind of have a picture of what we're looking at with the euro. Here's what I would be saying on the Kiwi dollar. And I know that Jamie's looking at this as well. As far as this possibly taking another move higher before it turns over. But looking at Kiwi dollar on the daily, there's the breakout of that long-term trend line that we were looking at. And if you remember last week, guys, we were talking about all of the times that the Kiwi broke through the 200-day moving average. And we noted that 5 out of the last 5 times that the pair moved through the 200-day moving average, the next following session saw a massive reversal candle day. You saw it once here in December, and you saw it 3 times here in February. Okay, where the break above the 200-day moving average closed above, the following day you saw a mean reversion trade take you right back below. The last one was a massive outside day reversal. We gapped lower. The second was the first break and close above the 200-day moving average. You were expecting to see another reversal close below if we were going to follow that same phenomena. You didn't. And that's why in the third here was the validation of a more significant breakout in dollar Swiss, in Kiwi dollar. So what does this mean from here? The only thing I want to note with very, very tentative clarity here is momentum still holding sub 60, even though price broke above confluence resistance. And the only other key thing I'd want to take note of, guys, and everyone should be paying attention and know this level very well, is going to be that 68.27 level, which is the 2016 open. So despite all the volatility that we've seen, it's just been a round trip play for the Kiwi, almost unchanged on the year with a slight decline. Okay, so what does that mean from here, Mike? This is all good and dandy, but what's the trade? So guys, from here, I do think you see another spout to the upside before this thing turns over. I'm broadly looking for Kiwi resistance to start looking for a downside move. Again, we're not going to try calling highs or try calling a peak on this. More so just looking for more signs of waning momentum, looking for more signs of short triggers as we hold below the yearly open. And that's really sort of the game plan I have. I'm really looking for a rally here to sell as close as I can to 68.27 with a conviction short trigger. As a disclaimer, if momentum closes above 60 and we pop through 68.27 on a closed basis, that's going to be what I'll be more comfortable calling just a broader breakout in price. So, Craig, I hope that gives you a little bit clearer of a picture, kind of what we're thinking with Euro Key as well. I do like the long side of the euro, but with what Kiwi's doing, wouldn't be surprised to see that kind of struggle a little bit before we make another sort of clear-cut, concise move. And in fact, let's clean up this extension now. We don't need this anymore. And some levels, guys, to keep in mind on Kiwi dollar, if those of you are trading it on a topside break, they are significant. Aside from the yearly open, which is 68.27, you have the October high day close. Okay, that takes into 68.50, another level you want. And then the December high day close comes in at 68.66. So really clean levels as far as the top side is concerned in the Kiwi, but I'd be looking for short triggers heading into the U.S. Open, into the 2016 Open. Craig says, great, thanks again. Yeah, you're more than welcome, Craig. Eileen says, no worries, not in the trade yet. So let's look, Eileen, let's jump into the sterling. So here's what British pound is looking like. And it's certainly a very interesting reaction that we got off the lows here. Let me just zoom this out real quick. Okay, so again, this is what the daily chart looks like on the British pound. The level that you're looking at here is just a basic 88.6 retracement. This is from the advance off the lows that you made over in 2009, late 2008. That comes in at 39.20. You saw a probe below there, obviously, to close out last month. The rebound, look where we're trading right now. Okay. So This level in gray here, just to give you some reference, is the January low day close that you made. Okay. More importantly, right now, why I'm really focused on this region is you have a lot. You have the upper or the actual concerted median line for the formation that we've been following since the May, August highs of last year. Really nice pivots. A sliding parallel extending off the September low also in that region right now. And then the low day close from last month there as well. We sort of been straddling that line over the last couple of days. Basic trendline resistance off the highs comes in just higher. Okay, and the stretch lows from January comes in just lower at that 141.46 level. So I'm looking at this range here, Eileen. Here's what the intraday chart looks like. And this is what was more interesting for me last night. I actually even highlighted it. I don't want to throw it on the radar chart just yet because I don't want to get anyone too excited about this breakout until we actually get some sort of validation of a reversal or a breakout. But this is what I'm looking at, guys. 50% retracement. This is just a decline off of the February high. Basic trendline resistance we just looked at on the daily chart. The weekly opening range high comes in just higher, and all of them converge right here. Okay, so near-term support. Well, if we take the same slope, extend it off that ascent that we made late last week, that gives us support right down here at the weekly opening range low. So you have a key range of 41.11 into 41.30. This is the 38.2, but a nice pivot in price. So we'll also continue to focus on that. Key resistance, 42.50 into the opening range high, 42.80, and that's the range you're looking for. If you want to play inside the range, more than welcome to. I would still be looking for short exposure against that level. If we breach, you're looking for a much more substantiated play. 43.50, 44.80 would be first initial topside targets on a breach here in the British pound. But certainly from where we are, it's a very, very contentious region. And with all the interest building on the pound right now and what's going to happen, I think this is one we want to definitely be ready for. The pound crosses, not so much in my focus just yet. I know that Jamie's starting to look a little bit more attent towards pound yen. Not much clarity on my side from there just yet, but searching for resistance. Jamie's also looking at 43.95, if I'm not mistaken, 40 type of region as the range, but near term, definitely coming into a very, very interesting area for the sterling. I don't have any plays on this, Eileen, yet, but I'd be looking for a break of this very well-defined weekly opening range before we do. Now, if this is, and I know that a lot of people maybe on Twitter or elsewhere will be looking at this as a near-term consolidation. If this consolidation trigger breaks to the upside, typically, as we usually say, these triangle formations are continuation patterns on average, which would suggest we should be looking for a long trigger or a breach of that 42.50 to get this thing going. For forward triggers, Eileen says, or can you also drill into the 5-minute? Yeah, sure. Let me bring up, I don't even have my 5-minute chart, Eileen. Give me one moment. Okay, so sort of your ugliest type of trigger outlook here was actually eyeing short, says Eileen, forward triggers. So you did have a decent trigger here, Eileen. I'm not sure what time you're looking to get into that, but this is what I'll say. Why this is a really strong trigger is, again, it's because you have some divergence in momentum pressing into a fresh high. Momentum divergence into a trigger break typically will be your best plays. If you miss the initial trigger, like we always say, the back tag of former trigger support as resistance, also typically a really nice trigger for the short side, specifically here on pound. So that would have been a decent play for the short side. From here, Eileen, I don't know if I'd want to be pressing shorts until we break back below 41.77. Really nice pivot in price. That's the basic objective, let's call it, triangle support if this is a consolidation pattern. So I wouldn't be looking into short triggers from here. Was actually okay. No, missed the euro session. Okay, so you missed that euro trigger and saw the swing RSI 70-30, etc. Yeah. Yeah. So look, for this one, Eileen, and specifically on the pound, you don't really have very strong momentum conviction on the near term. Okay. This is not something I really like getting involved in, specifically when you see a 60-40, 60-40 hold like this. Yeah, this was a 30, but we're right back in the middle of the range, and we're right back in the middle of the session range. You know, if Eileen, if this low had happened and price was near the session lows or the extreme lows of one of them, it'd be a different ball game. But we're coming off the low momentum, now at a benign momentum signature again, and price is right slap in the middle of the opening range for the US so far. So I don't have a setup from here. I'd need to see either a long trigger back towards support down here, and maybe something like this, Eileen. Take the high in price. If we get a low in price, or we get a low or a hold near the opening range low, the low in price for the week, near-term support, then a long trigger, not the most conviction one, but it'd be something I'd be looking at. More so, I'd be much more interested in a clearing out of this triangle to the upside, a pullback to get long to play the rally, or if we get a downside break, remember, even if the triangle breaks to the downside, you still need to clear the weekly opening range low. So even on that scenario, I'd be mindful of any short exposure until we clear the opening range for the week. Does that make sense? Eileen, need the break and the OR. Right, right. On a pair like this, Eileen, if we were mid-trend and Sterling certainly has been in a very, very, very strong sort of just drop-off, that's a different ball game. But now that you're getting really strong divergence on the daily chart, trigger break to the upside last week, price is at resistance, sort of straddling it, this is not a trade I want to mess with. This is going to chop up a lot of people before it makes its move. But certainly we're getting the hallmark of some near-term reversal possibility here. Eileen says, yep, that makes sense. I see it now. Thanks. And you're more than welcome, Eileen. More than welcome. Let's see if we can get this pound play. I really do typically like trading this pair. It's just been very, very hairy down here. Gary says, hi, Mike. Hope I haven't missed it. Did you cover dollar, yen, and gold? Haven't covered either, Gary. We'll take a look at the abomination for you, buddy. As you know where I stand on this. Listen, it is actually getting some clarity for the month, and the only thing that I do like about the March Open so far is that the opening range is very, very well defined. Here's your opening range for the month. The opening range high comes in right into the median line we've been following off the highs from last year. The opening range low comes, or the weekly low so far comes right at the monthly opening range low so far for March. That low is actually 112.14, 112.15. You saw that drop into overnight trade as low as 112.21 before rebounding. Look, this is the range you want to play. My favorite move, again, would be a topside recovery here before you start to sell again. At the end of the day, here's the 30-minute looks like since the start of the week. Okay. And again, just to give you some reference. Okay, so I guess the only thing I really want to highlight here is the basic support that we've come into, and that's 112.44 into 112.37. I know an overnight trade, like I said, we dipped test those lows for the month, or just ahead, that last low that we made in late February. But more importantly, this is the 618 retracement of the rally off the lows. A longer dated 618 retracement from the ascent off of the lows that you made in February, and the low day close, all in this region. Momentum on the way down. And I was looking at this last night, right here, with price action. It looks like it made a lower low, but on a closed basis, it's actually the same exact low. Price and the oscillator making a higher low. That's not divergence, but this is. Price action, lower low, oscillator, higher low. So certainly at least this bounce here is something I was looking at. Again, it's dollar yen. So had I taken a long scalp with a stop against that low, I would have gotten stopped out. This is classical dollar yen stuff, guys, why we call it the abomination. So just be careful. Um, you got the BOJ on tap a little bit later in the month, but at the end of the day, I just don't have any clear-cut conviction on it. Gary, let me know if there's a specific play you're looking for, man. I have the key levels in mind. Basically just sub 114 and key support that we just highlighted on the intraday chart, right? 112.30, 112.40 right now. Aside from that, not really trying to get involved. Not really trying to get involved just yet. Now, if you remember, if you're really hell-bent on trading some of the yen crosses, the Aussie yen is the pair that we were highlighting last week. That is still our favored move as far as the Aussie or the yen crosses. Here's what it looks like on the daily chart. So I'm possibly looking for another stretch here to get back on the short side, but certainly last week we flipped the bias aggressively long after we broke the highs here on the 2nd. This was a break of multiple weekly opening ranges and certainly a very, very nice pivot in price based on the close low that we made in September. A sliding parallel of the same operative slope that we've been following off the highs also gave out on that break last week. And certainly subsequent to that, we've already taken out to the major targets, the 2015 low day close, which is 84.72. That's what's resistance right now. Key near-term support is still going to be the 83 handle. The 618 retracement of the February range, and more importantly, basic former trendline resistance, turn support. So I really like the Aussie yen. If you're really hell-bent on trading the yen pairs, this is one I'd be very, very interested in, specifically on the scenario where we see continued or excessive yen weakness with what the Aussie's doing. Look for that breakthrough the 2015 low day close to get this thing going. Gary says, not good, not got a play on the dollar yen, just checking that I hadn't missed something. Yeah, no worries, Gary, and you're in the right place, man. Always feel free. For me, the yen has to be exceptionally clear. And again, maybe that's just a personal thing, but the yen and I have not been the best of friends over the years. So I tend to be a little bit more picky and much more meticulous in choosing the setups there. I do like this Aussie yen setup. Again, key focus range is going to be the 83 handle into that 84.72, the low day close for last year. Looking at this on an intraday chart, Gary, for Aussie yen, here's something I'd be paying attention to as well. And this is the scalp chart from last week, guys, if you remember. Do you remember how many weeks we held that opening range finally broke here? All the topside targets got taken out into the 100% extension. That's now resistance. Key support was the breakout zone we talked about last week, right at the 83 handle, 82.80 into the 83 handle. So the scalp chart is unchanged. The level is still pretty clear. Again, if you need to take a snapshot of this, guys, go ahead and feel free to do so for Aussie yen. Key support still 83. Dave says, safer to just trade Aussie, a little heavier than mess with the yen crosses. Dave, I'm in the same boat as you are, man. You don't have to tell me that. I'm right with you. Again, like I said, if someone puts a gun to my head and says trade a yen pair, it would be Aussie yen for me right now. But yeah, I'm not really a big fan of the yen crosses here. For Aussie yen, you're waiting for 83.47 to look for longs. So 83.47 was just a soft target, Eileen. It turns out that we actually just rebounded that in overnight trade. I'd be more interested in taking a long exposure where I can take a stop against this region. Remember how big of a pivot this was? This whole 83 region. Okay, see back? 83, 83, 83. Really nice pivot. So that would be sort of the ideal play, and specifically with the former trendline resistance being support, a little bit lower, Eileen would be sort of my best area for a possible play to the long side in Aussie yen. If we don't get that dip, I really can't do anything until this thing breaks through the opening range high and pulls back. If that means I don't get a trade till Thursday, Friday, or next week, so be it. But that's what I would need to get involved here on the Aussie yen. You're right basically at the weekly open, Eileen. You're right in the slap in the middle of the weekly range. So for me, no play imminent from here. Make sense? Oh, yes, the stop area. You got it. Great. Okay, so Gary, hope that helps on dollar yen. Some of the yen crosses I'd be looking at, man. I know that Jamie loves the euro yen too. That's been something I haven't really paid much attention to. I kind of left that in his hands, but the swing side of trades, you're still holding on to that euro yen long as well. So we'll see if we can get some play on that side. I do have a median line that I kind of just rebounded off of here today. I want to see that hold. Would love to see that sort of give us a little bit more thrust to the upside. But gold, and I want to go over crude real quick ahead of BOC. So here's what gold looks like. Okay, don't start panicking yet. It's not the end of the gold rally. We're not going to see gold at 1150, I personally think, just yet. But certainly near term, it is at risk for a much more substantiated pullback. And there's a couple of things to suggest that. A, you're seeing some really strong divergence on the daily chart. And remember, we always note that when we see these divergence signals, the farther away they are from 50, actually the weaker the signal becomes. But when you get one reference point above the extreme and one below, those tend to be decent signals too. So here's price action pushing into a much more substantiated high. Remember, we're only looking at the close basis, okay? And the oscillator making a much lower high. In fact, another thing I was looking at is this former trigger support in momentum, broke, and then offered resistance. You can see that the momentum oscillator couldn't get back above that trigger after we broke back last month. So it suggests near term, yes, the momentum signature, the momentum profile does look like we could see a little bit of a turnover here in gold. At the end of the day, I'd still be looking for some support, A, at the monthly open, which we're approaching very, very closely. The monthly open comes in at 1238. Okay, and former trendline resistance. Let me just zoom out real quick. So this is a basic trendline resistance extending off the highs that you made in August of 2013 and in March of 2014. You can see that we extrapolated, or we took a parallel of that same slope to the highs that we made back in May, and you can see that also on a closed basis, essentially catching the highs. Okay, so could we get some pullback from here? Yeah, sure. Is the dollar index at support? Absolutely. Would it make sense for a dollar rebound and gold to pull off a little bit? 100%. Okay, 100%. Keep the picture in view. It doesn't mean that we're looking for dollar continuation past 1220 or 12,200, but certainly suggests that you could see a little bit more of a concerted rebound. Gold could come off a little bit more before it turns higher rather. Looking at the gold picture from another view. Here's what the weekly chart looks like. Okay, and again, just to give you a picture of where we are, momentum flat up against 70 like a brick ceiling. Okay, does that mean that the broader rally is over? No, but it certainly suggests that near term you could see a little bit of a kickback before it starts to move off. Markets aren't linear. They're not going to just continue to travel one direction. I think if everyone looked at this chart, we'd all agree together that this has been quite a start for gold for the year, a really subsequent crazy advance, only likely that we see some sort of kickback here before we move off. So just to pad your expectations, guys. I do love the gold trade. I think you get a mean reversion here, pullback. You should be looking to get long for gold. Where that level would be of where we'd start to look for possible reentry, it's tough for me to say from here. The first area would be that basic trendline resistance if we break back below, or this would be the first area of support. And that takes you, interestingly enough, into triangle support for the formation we cleared last month. Okay, so like right here. It's like 1233, 1235 area. Interestingly enough, the monthly open comes in at 1238. So you got a really, really interesting area here for gold over the next few days. Here's what gold looks like on the 30-minute chart. Haven't checked it out yet. Let's see what it looks like. We're on the 2-hour. Okay, so if you guys remember, these are the levels that we highlighted on the scalp charts last week for gold. There's a triangle break. Hit the 100% extension of the formation, 1272. The pullback could be just a simple test of former resistance as support before we move off. I don't know, which is why, again, I'm going to continue to look for long triggers well above the monthly open. This is going to be the invalidation level and would suggest a steeper decline in gold. Questions on bullion prices. Also some divergence even on the 2-hour chart here. All right. Last but not least, crude. Everyone's going to be looking at this. We're going to see if the BOC has any comments with regards to what crude prices have been doing on the overall export market. Looking at crude prices, you have very, very, very clear-cut levels. I hate to keep saying that today, but I guess coming back from a couple of days off, you start to see things pop out with you a little bit more clarity. Look, 38.47, 38.31. You got the 100 off the low, the 50 off the high, both coincide right in here. The August low day close from last year, just lower at 38. So you're looking at a major key resistance we tagged already yesterday before we made that reversal close. So where do we go from here? Look, momentum is holding sub 60. Your key support and near-term bullish invalidation level remains at 35.34 into 35.50. And this is the break I would need to get more on a bearish side for gold, for crude. That being said, even on a pullback scenario, while above this region, I'd be looking for possible long exposure on crude prices. If we get a little bit of a kickback, okay, a little bit of a move lower in crude, you see that dollar CAD starts to move off a little bit. I think it would get a nice reset to the trade. But at the end of the day, this is a big move. And if this is the legit break of this downside formation, we'd want to stay constructive above 35, 34, 35, 50. All right. So clear-cut levels for crude. Again, we love this chart. We haven't changed a damn thing on this chart, guys, for literally 3 weeks. So keep following these levels, and I think we'll be eyeing that major key resistance near term at 38.50 for crude prices. All right, that takes us into 9:30, guys, and wraps things up for us here today. Don't forget, 1 p.m. Eastern, Jamie's going to be on for the midweek strategy webinar, give you a little bit more of a flavor and a picture for some of the swing trades that we're holding on that side of the business. And again, that's at 1 p.m. Eastern today. We will see you then. Till then, best of luck trading. Remember, 10 o'clock BOC. We'll give you updates on SB Squawk as they come out. See you tomorrow, guys. Cheers.